$1 million. Sounds like an extraordinary amount, right? But unfortunately, that is the approximate amount that the average American needs to retire comfortably in 2020. Now, while it's possible to save to that amount, it is far more practical to invest your way there. Hey guys, it's Lynn here. Now in this video, you will learn from Peter Duan how you should invest your money. He's going to show you faster ways to invest without spending time and money, and what you need to know about cryptocurrency and more. Now, Peter has spent 7 years working at Wall Street and has accumulated over 25,000 hours of investing experiences. So whether you're still struggling with paycheck to paycheck or you've got money to invest and not sure how to make the most of your money, well, Peter is going to show you practical investment tips. Hey Peter, so good to have you here today.
Hey Lynn, how are you?
I am good. So are you still in Vietnam right now?
Yes, I am. I've been actually out here in Saigon for almost 6 months now. I'm about to move back to Da Nang, which is a beautiful beach town. Yeah, looking forward to that.
I know today we're going to talk about how to get people out of debt and be financially free. And maybe they're not in debt, but they just want to have financial freedom. And you have worked at Wall Street, etc. before, and that's quite interesting. So I reckon that we could start with sharing a little bit about your background on, your journey in Wall Street and where you're at now.
So yeah, thanks for having me on. Just a little bit of background on me. I was fortunate enough to grow up to have the American dream, right? I went to a good university. I went to UCLA, but actually when I first graduated from UCLA, I couldn't find a job. And the reason for that was because I majored in environmental science, which at that time, there was no real demand for it. So at first, I was obviously a little bit upset that I worked so hard to get to a great university, but coming out of the university, I didn't have any real skills to get me a good, tangible job. So that was an opportunity for me to really assess on what I really wanted to do. And I always thought I was pretty business-minded. And because of the experience of me not being able to land a job because of a lack of hard skills and experience, I thought, what is the hardest skill that I can acquire? Business. And I thought, okay, finance. I was in a fraternity, and some of the smartest guys and most successful guys that was in my fraternity ended up in Wall Street. So I thought, okay, no matter what, I'm going to try to figure out my way to work into Wall Street. And so if I knew kind of how long that process was going to take, I probably wouldn't have done it. And I think the phrase ignorance is bliss is very apt for my experience. So what really happened was I pretty much used my UCLA kind of name and leveraged into unpaid internships for an entire year. Then the next year after that, I only made $10 an hour, but I was working 70, 80 hours a week and gained a lot of really hard, tangible skills. But then the third year, I was able to land a 6-figure job, have my own Ocean View office on Newport Beach. So really, it was a lot of hard work, a lot of grind, but I think that it paid off in the end. I didn't know if that answered your question, but
yeah. But so cool. Wall Street definitely has this beautiful bell to it. So cool, So was it as cool as what the movies make it out to be? Was it, a lot of rich people working in Wall Street, or what was it really like there?
It's definitely not like Wall Street, where it was just like, it looked like a big party and everybody was making money all day. It is a pretty intellectually intense place. You work a lot of hours. But yes, after hours, doing team dinners and stuff, everybody, do have a good time, eat really good food at really nice restaurants, so on and so forth. But yeah, it was mostly a lot of hard work and intellectual work.
And so the reason why we're here today also is because you really took on what you've learned in the years of working at Wall Street to now helping everyday people in the world to really take control of their finance. So can you explain what your passion and reason why you started this business?
Great question. So let's take a step back, right? If most people want to invest their money, because if not, then your money's sitting in your bank account, earning very minimal interest, and it doesn't even outpace inflation. So the issue with that, though, is that there's only 2 ways to really learn how to invest your money. One is you teach yourself how to do so. You'll spend hundreds, if not thousands of hours, reading articles, books, watching YouTube videos, but still don't really know how to piece it together to do it the right way. Or you outsource your money to some financial advisor who will charge you thousands of dollars in fees each and every year, which compounds into 6, if not 7 figures worth of fees over your lifetime. I took a step back and I realized, wow, this is kind of ridiculous that there's no kind of third option, which is what I effectively created, where a guy like me who has almost 25,000 hours of investing experience and condense it down into about 10 hours worth of one-on-one coaching to really teach the fundamentals of investing to the average day person. So with analogy, I like to teach a man how to fish as opposed to fish for him and take a big portion of the fish. So that's kind of my new business model. And yeah, that's what I do on the day to day.
Okay, so in terms of who you help, I mean, I'm guessing there are two types of people that might be watching this. One who is scraping by, probably not in the investing phase yet, but really need to find a way to get out of debt in order to get to the next stage of having money to invest. And then there are people, I reckon I fall into this category more, is in the sense where I'm not too savvy with investing and I think I'm wasting an opportunity to invest because I have money there, but my limiting belief is I'm not a good investor. I'm just going to invest in property because that's what I know. And so I'll just wait to do that, but I don't do much with it. It's kind of just the safe way. And so let's talk about the first category of people first, right? Someone watching this going, okay, well, sure, I want financial freedom, but just paying down my credit card. What are the steps to get out of that?
So I want to caveat that I personally do not have any experience with debt myself. I've been fortunate enough that my parents was able to pay for my college experience, and coming out of college, I never experienced debt. But that being said, I have studied what are the things that you need to do to get yourself out of it. So first and foremost, I think it's important to take an audit of your expenses. A lot of people don't realize that to the technological world that we're in, a lot of people would subscribe to things that they end up not using. And so it is important to, at least on an annual, if not quarterly basis, go through your bills, your credit cards or whatever, and figure out like what are some areas that you just don't use and you can cut out. So those are very quick, short wins. But then after that, really figure out like how can you, most people think debt is bad, right? And I think there's two categories of debt. There's good debt and bad debt. So what do I mean by that? Well, good debt is, say for instance, you're able to buy a home, you have a mortgage. Obviously you're not going to buy a house 100% in cash. That's not very practical. So and with a low interest rate environment, it's good to get a mortgage, right? But bad debt, on the other hand, is something like credit card debt. And also, especially with people's kind of spending habits, a lot of people will buy things that they don't need. So in my mind, I think that's a double whammy. Not only are you buying something that you don't need, but you're also getting charged, anywhere between 15 to 25% in interest, which is actually preposterous. If you get a 15% rate of return in the market, that's a phenomenal rate of return. So actually the best use of your, money while you're in debt is to pay down aggressively your high interest debt, like credit card debt. Now, one guy that is very famous in the financial industry that helps people get out of debt, his name is Dave Ramsey. Yeah. So he has a concept.
Yeah, I know. He's a Christian, cool. He's a beautiful guy. Yes.
Yeah, exactly. Yeah. So I don't agree with a lot of the things that he say on the investing side, like mutual funds or insurance or whatever. But I think when it comes to getting out of debt, he's actually very smart. He uses something called the debt snowball strategy. So that strategy, as opposed to what others say is like a debt avalanche strategy or whatever, the debt snowball strategy works like this. If you have multiple different like sources of debt, like student loan debt, credit card debt, or whatever, he actually says to work down the debt that has the lowest balance, regardless of interest rate. The reason for that is because psychologically speaking, it is much easier for you to, you need to create momentum with your good spending habits. So even though mathematically speaking, you ought to always pay down the one with a higher debt, psychologically speaking, it is much more likely for you to get out of debt if you just take down the smallest debt after smallest debt. That creates a good momentum for you to just say, okay, once and for all, I'm going to be out of debt. And actually, this has shown that it is much more likely for you to get out of debt with this strategy as opposed to just paying down the highest interest.
Yeah, I've heard of that strategy and it actually does work. And I've done that in the past as well. And then you kind of, whatever you were paying in that debt, you kind of keep that same payment and add more or whatever to pay it down more. So yeah, I agree with you. I think it's being very sensible. It's not like, sometimes people are too early into starting a business when they haven't even got a safe place to live or just the basic foundation. So I think it comes down to like, let go of your pride, let go of your too much like, oh, I need to be like someone else and start a business, let's say. But based on your circumstance, have a job, a good job, save up, pay down your debt. And then when you feel like you have some room to breathe, then you can actually put into business or whatever, upgrade your career, right?
Yes, I completely agree with that. And I just speaking from my own experience, it took me almost 2 years for me working my own business to become profitable. So, if it wasn't for like the big nest egg that I stored away and living in a cheap country like Vietnam, I would be very psychologically stressed to create my own business. So yes, I highly agree with you. If you look at the list of the richest people in the world, they mostly get their wealth from owning a business. But before you have to do that, you have to learn how to crawl and build out a nest egg first. So definitely consider getting out of debt before trying to start your own business.
You just raised a really good point. So living in a place like Vietnam means your living standard is so much lower. You have less pressure to make the same amount of money. Like if you're in Australia, you have to make a lot more to pay for your living expense. But if you really wanted that lifestyle, you can make it work, right? You can be an entrepreneur, but live in a different place. So tell me more about that.
Yeah, so I knew that because I had the experience of trying to break into Wall Street and realizing how long of a process that was, I took that mindset when it comes to building a business. I think nowadays we're consistently bombarded with advertisements saying, oh, it's so easy to make 10K a month profit, so on and so forth. But that's just marketing, that's just to get people who are ignorant of the fact that it really is very difficult to start, a business to get 10K a month, right? If it's that easy, everybody would do it, right? So really what it takes is you got to build patience, but as you're being patient, you still want to live a decent life. And so a place like Vietnam has the best of both worlds. For instance, I live in Saigon, which is actually one of the more expensive cities within Vietnam, but I have literally every amenity available to me as if I was back in the States. However, my cost of living is probably a third as much as it was if it was back in California. For instance, I don't spend more than $1,500 all in, and I don't cook. I'm a bachelor. I still like to go out on the weekends to have some drinks with my friends, go to nice restaurants. And yeah, I live also in one of the best parts of Saigon, and all in, that's $1,500, which is like unheard of in America. So yeah, if you are considering, of course, getting out of debt and looking into starting your own business, especially online business, I highly would recommend being patient with yourself first and foremost, being strategic in how to stretch your money by living in places that are cheap, like Vietnam.
Yeah, I love that. Okay, so let's talk about the next group of people, which are the people that now maybe they're working in a really good job and they've got spare money to invest, but they're probably not making the most of it, or running a business and making money, but they're not, once again, have that buffer of money. So what do we do here? What can the veteran Wolf of Wall Street share to make us more money?
I think first and foremost, you need to educate yourself. A lot of people, again, we live in an instant gratification world. We're consistently bombarded with people who are making quick money if they invested in Tesla or Bitcoin or whatever. Now, that being said, those can and often are good investments, but you just really need to understand the fundamentals of why they're good investments, because the number one killer of investment returns is actually human emotion. And if you cannot ride down the market and still kind of what they call diamond hands, which means just holding it and understanding that in the long term it's going to win out, then you are going to lose out on a lot of money. There's a statistic that like every 4 years, there's likely to be a 10% drawdown from the market. And when someone sees the market going down 10% or the investment portfolio go down 10% within just a short couple months, a lot of people will have the trigger finger and be like, oh my God, this time is different. And actually that phrase, this time is different, is exceptionally damaging to investors because they will just panic and oftentimes they'll sell at the worst time.
So what would be the right mindset when it comes to being a successful investor? What do we have to tell ourselves?
I generally try to tell people to think about investing not for yourself, but rather for the retired you. So I like to measure my life in not having regrets. And I know that by the time I'm 65, if I didn't have the right principles in mind and the right tactics in mind to invest, then I know that I'm going to be mad at myself that I didn't take the right steps. Now, that being said, you really need to start investing as soon as you possibly can, simply because the power of compound interest is extremely impressive. I love to show people like a compound interest calculator where you really don't need that much money each and every month stored away to actually become a multi-millionaire by the time you retire.
Okay, so what would be the first step in investing? So imagine I am that client of yours here. What do I need to do to really grow my finance and feel like, I guess, what would you say financial freedom is for you or for the people that you've worked with?
Yeah. So oftentimes when you ask normal people who don't know much about finances, like how much they would like to have in retirement, somehow a lot of people will throw out the number like $1 million. Well, matter of fact, if you can Google it, like if you're in the States, for instance, $1 million is actually how much the average citizen in America needs to retire today, but now if you're a 25-year-old and looking to retire in 40 years at 65, that number literally grows into almost like $2.2 million simply due to inflation alone. So what you need to know is two things when it comes to your specific financial freedom number. And that is, what is your lifestyle factor? And this is what I covered in my very first lesson in my program, but high level, your financial freedom number comes down to two factors. One is your lifestyle factor. How much do you spend comparatively to the average person in your city? Okay, so say for instance, I live in Saigon and the average person in my city spends $1,000 a month. Okay, which it's not true, but I'm being hypothetical, right? But if I spend $1,500 a month, that means I have a 1.5 times lifestyle factor than the average person. Okay, you take that lifestyle factor, and then the second factor is, where are you going to retire? So again, if I was to retire in California versus, again, using Vietnam as example, it's going to be a much different cost of living. Right? And so assuming that you're not going to change your lifestyle factor, you've got to project out where you're going to retire and then take into account inflation. So I know those are a lot of steps, which is again why I teach what I teach, but those are kind of the two major factors that you need to consider of how much you particularly need in retirement.
Gotcha. So yeah, I mean, financial freedom is really about your choice of living in the future. Like your freedom is very different to someone else's freedom. Someone else who's already wealthy is thinking about some way wealthier lifestyle, and then you, on the other hand, is different. So then, thinking of where do you want to live, what you want to do, doing nothing, but yeah, I guess your house location. Even if you're living in Sydney, where do you want to live in Sydney makes a difference to that. Okay. Yeah. So then, knowing that you know that and you've got the map out, you know exactly what you're spending right now, then what would be the next step?
Then the next step is to kind of figure out what are the things that you ought to invest in to create an investment portfolio that will get you to your financial freedom. Now, most people would talk about stocks all day, but they don't go. Most people also don't realize that there's so many different asset classes that you can invest in to get you there. You invest in real estate, that's one asset class. Stocks definitely should be a big part of your portfolio, but there's other asset classes like bonds that you got to consider, or cryptocurrency nowadays, which is a huge area that I actually think is here to stay. Matter of fact, I kind of know it definitively based upon the trajectory we're going. So you got to figure out, out of the universe of the things that you want to invest in, how do you create a diversified portfolio to balance out the risk while still growing it over your life.
So does it mean that you have to educate yourself on each asset in order to invest, or is working with someone like you just tell them where to invest?
Yeah, so I want to caveat that I am not a financial advisor, right? So I'm not allowed to tell you, hey, invest in that, invest in this. What I do tell you is, what are the best practices to invest? So I know that's a bit ambiguous. Like I said, there's literally so many different asset classes to invest, but I just want to teach people what are the most easiest to understand asset classes and most accessible to them. So for me, I teach stocks, bonds, real estate, and cryptocurrency. Those four asset classes combined give you a minimally diversified portfolio that will still mostly help you ride out almost any type of market cycle.
Okay. And so basically by teaching us what they are, we then make choices of within that category of stock, which company are you going to invest in? Because it's still up to you, based on your judgment or love for certain companies you invest, but you don't want to say, hey, invest in Facebook or invest in certain things.
I actually don't teach how to invest in individual stocks. And the reason for that is because you can look at the statistics. Even professional Wall Street investors cannot consistently outperform the market. So for instance, the market in America is considered the S&P 500. The S&P 500 is 500 of the largest publicly traded companies in America. So you got to think about it, right? 500 of the largest publicly traded companies in America, that's across also 11 different industries. So it's a very well diversified investment that you can make, right? So you need to diversify even within each asset class. And the best way to do that is oftentimes index.
Okay, so it's still safe to be investing. If you want to be safe in stock, you invest in the ASX. So the top company's stock, that's the safest. But the more of a higher return or whatever is when you start to play a little bit of a not a guessing game, but a little bit more research and picking different stock. But generally going with them, they in short, over 10 years or whatever, it's the same. It's predictable growth, would you say?
Yeah, it is. And there's actually a reason why, if you look at the chart of the history of the stock market, it always goes up in time. But that being said, the time frame needs to be in consideration, because there's times in which it's at a high and it doesn't go back to that high for 10 to 15 years. The reason why the stock market almost always goes up over time is actually very simple to understand. And that's one word: inflation. Okay. So if you got to think, every business needs to make a profit, right? But if every input of that business is increased in price due to inflation and they need to make a profit, then by nature, every business will go up, and the stock market will go up over time, right? But most people don't understand that, and most people don't have the long-term thinking of 10, 15 years where it can be down and they still be able to have diamond hands to kind of ride that out.
Okay. And in terms of investing, if you're based in a certain country like Australia, do you suggest you can invest in other countries and international, or do you play safe and stick to real estate within yourself and stock within your own country, or what?
I am American, but regardless of that factor, I still believe the US is still the best place in general to invest, simply because it is the world's largest economy. And yes, people are talking about China, overtaking America to be the largest economy going forward. And I agree with that. But there are a lot of reasons why America is still a great place to invest. Some of that is the fact that there is strong institutions that keep it in place. So for instance, 08, 09, during the financial crisis, it wasn't Obama who got people out of the crisis. It was, three guys effectively. It was Tim Geithner, Hank Paulson, and Ben Bernanke. So if I said those names, most people don't know who they are, right? But Ben Bernanke was the Fed chairman. He was the one that controls the interest rate environment in America. Now, I won't go into why that's important, but that controls effectively the entire world's money supply of US dollars. This is a huge role, okay? Hank Paulson is the former Secretary of Treasury, who was also the ex-CEO of Goldman Sachs. His job was to coordinate with Ben Bernanke to say, hey, we have a very, very competent guy in Ben Bernanke who studied market cycles and depressions in particular, and knows how to get us out of it. So his job was to calm down Wall Street to say, hey, we know what we're doing. And then Tim Geithner, he was a congressional liaison because he was the acting Secretary of Treasury. So his role was to calm down politicians. And with those three guys, they were the ones who got us out of the financial crisis. Now, like I said, most people would not know those are the guys who got us out of it, but that is the strength of the American system, where there are institutions and checks and balances in place that will help us navigate almost any type of situation.
Okay. Now, talking about the economy and America and all that, and especially COVID and all that, and people not really trusting in the currency market and they're getting to crypto. So what's your take on the crypto market?
Oh, yeah, great question. So you got to separate the price that you see, which of course it's exuberant in a lot of people's mind, with actually what is behind the cryptocurrency technology. And that technology is called the blockchain technology. So the blockchain technology is a revolutionary technology that keeps an open source ledger for every single transaction. The reason why that's important is you can take a step back and think, look at all the history books that's been written, right? All the history books have been written from the perspective of the victors. And by definition, there's going to be some sort of bias on the way that the information is presented. Now, for the first time in history, you have a record that is immutable, that is verifiable by anybody at any time, yet that also on your end, you can have anonymity. So you have sovereignty over your data, but you can also publicly verify a lot of almost any transaction on the blockchain. So it's a very complicated technology to really understand, but yeah, the best case example that I can think of is, let me give you an actual example. So right now, if you were to buy a house, okay, if you wanted to buy a house, you have to go through an army of insurance agents, title agents, maybe even some environmental agents to figure out, to get all these kind of things in place before you can transfer the ownership of your home. Now, say for instance, with blockchain technology like Ethereum, for instance, it's called a smart contract. So as long as you can say, hey, these are the conditions that you need to meet to buy this house, as long as you can meet them and verify it on the blockchain, the transaction can happen instantaneously. without any intermediaries. So you effectively can cut out both time and a lot of money with just one single transaction. Now imagine that on a global scale, and that it literally unlocks hundreds of trillions of dollars over your lifetime. Now humans are not very good with big numbers, but it really unlocks a lot of efficiency in the marketplace that has never existed.
Okay. So then why is there Bitcoin, Ethereum, Bitcoin Cash, and all that? Are they, if you were to explain in layman's term, are they different currencies, like US dollars, the Australian dollar? Like what is that?
Yeah. So you can think about it this way, like what is money, right? What is money? Money is nothing other than consensus, right? If you look at the history of money, we started off with barter system, right? My cow for your sheep. But how do you measure something that is not truly apples to apples? Yeah. Well, then it started evolving into something that's more standardized. So the very first thing was seashells, right? But the thing is that seashells can be destroyed and so on and so forth. So then they moved from that into metal coins, right? Because now it's more standardized, and the value of the coins within the value of those coins are within those coins themselves, because those metals can be melted and converted into jewelry if it's gold, or if it's iron, it can be converted into weapons. Okay, but then from there, it's hard and it's weighty, right? Like it's heavy, right? So then they moved into a paper currency route, and then now finally they moved into a digital route. So really, money is just consensus, and actually the way these cryptocurrencies work is that it's an anti-fragile system. So the more people that they use it and try to hack it, the stronger it gets. It's actually one of the first systems in the entire history of humanity where it actually works with human nature of trying to take advantage of the system to get one up on another. It actually uses the greed of humans to strengthen the system. So this is nothing ever been like that. This is a technology that's never existed. And that's why it's a strong system that's only going to get stronger.
So because with money, the government can always print more money, and that's why the money isn't worth anything. But then because it's digital and it's trackable up in the cloud somewhere, it's legit. So then, but why is there the different types of things? Like I'm talking about the Ethereum, all the different cryptocurrencies.
There's over hundreds of different cryptocurrencies, and obviously I don't know all of them. Matter of fact, I don't know the vast majority of them. But there is a fundamental difference between something like Bitcoin versus Ethereum, for instance, right? So Bitcoin, you can think of it as digital gold. So gold has been a storehold of wealth for humans for thousands of years. So this is why when the stock market usually goes down, gold goes up, because people are looking for a flight of safety into something that they know has value. Now that has effectively transmuted itself into Bitcoin. Okay, so Bitcoin is the very, very first cryptocurrency, and therefore will always have a mind virus for the majority of people, that it would always have a store of wealth. So the way I think about Bitcoin is, there's other cryptocurrencies that are way more, useful. Like Bitcoin itself is not very useful for day-to-day exchanges. Just like how I wouldn't go to Starbucks to pay for my cup of coffee with some gold, I won't go to, Starbucks to pay with Bitcoin. And that's because the protocol behind Bitcoin is actually not very sophisticated. They can only do less than 10 transactions per second, which is like horrendous, right? You compare to how many people are using Bitcoin, right? As opposed to Visa, where they can do thousands, hundreds of thousands of transactions per second.
Yeah.
Okay. So you can think of Bitcoin as digital gold. Now, Ethereum is both a currency and a smart contract. So I give you the example of the smart contract with buying a home, right? It's a programmable money. So it's like, as long as certain conditions are met, transactions can happen instantaneously. That's why there's hundreds of different cryptocurrencies, because there's different variations of Ethereum-like capabilities. Now, of course, there are some that are faster than Ethereum, that, so on and so forth. I don't know all those, but no matter what, it's a very, very exciting area, and it's here to stay.
So in terms of investments, like the different groups, would crypto still be very high risk versus like stock? Which ones are from lowest to highest risk?
Okay, so generally speaking, cash is the lowest risk. But really, if you think about it, it's one of those things where during this current environment where interest rates are so low, it's actually one of the worst investments, because it is literally losing its value due to the rate of inflation each and every year. Okay, so it goes from cash to bonds to to real estate, to stocks, and then cryptocurrency. Now, the higher that you go up the spectrum, the higher the risk, but generally the higher the reward. It's just up to you on your own personal preference and your desires, what you need.
And you would always recommend a bit of a balanced portfolio where, and depending on your risks, whether you do more of that or less of this. And so how much would you need to get started with investing, and what would it be for every month to feel like you are doing something about your investment or your financial life?
Yeah, I mean, you can be starting investing at any level. Matter of fact, there's services where, like, there's apps, for instance, like Acorn back in America, where you do, for every transaction that you do, it can be rounded up to the nearest dollar, and the difference between that can be automatically invested in the stock market. So you can start, and you should start at any level, because again, the power of compound interest. But at the end of the day, you should not invest if you don't know what you're doing. So I would say the first, call it, year of doing it, you should dabble slowly, but definitely be educating yourself in this at the same time. Or if you really realize the power of compound interest, you would either work with a financial advisor or someone like me who will actually help you explain the concept of investing. Now, financial advisors, like I said, generally won't teach you how to invest, and definitely will charge you an arm and a leg. So yeah, it's really up to you on how you want to do it.
Okay. So, because if you invest in something like Acorn or whatever, and because you feel like, look, I'm not a sophisticated investor and I just want to invest, and what would then, like, in terms of return, is it still better than holding cash? Is what you're saying? Like, it's still better.
Yep.
But to say that they just invest in stock, does it mean that it's still better than real estate, less risk than real estate?
No, I can't say that for sure, right? I mean, real estate is highly location dependent, and it's also supply and demand dependent. So for instance, in America right now, residential real estate is at an all-time high, and that's because in the 08-09 crisis, it was started from the housing crisis, right? And so a lot of these developers got really, really frightened from the last crisis, so they didn't build out homes. And so again, it's a supply and demand dynamic. The supply was very limited. It is very limited now. The demand is high, especially considering that millennials are entering the age of being parents. So they're moving away from big cities and apartments into home ownership. So again, I cannot definitively say that it is better or worse.
Yeah. And what do you say about, like, I mean, in general, if you look at the history of property, it always, let's say in Australia, it doubles, it just keeps going up. But then you're always so frightened of the bubble, they're saying it's going to pop, it's going to pop, it's going to pop. Out of your many years of being in finance, like, what can you say about what the media says or what really happens in, like, to say the property world?
If you look at history, real estate has been a phenomenal investment for a lot of wealthy people. Not only are there tax benefits, so say for instance, get a mortgage, you can write off the interest expense, but generally it does appreciate over time. And that's because, again, due to inflation, it's known as an inflation hedge. So if there's a rise in inflation, generally the houses rise. But I have actually a pretty unique vision of the value of real estate actually meeting an inflection point somewhere down the road where that historical truth may not persist. And the reason why I say that is because we're moving more and more into a digital world. So I don't know if you ever watched the movie Ready Player One, but it is a movie by Steven Spielberg. It's based upon a book. And what it is that a bunch of people in the real world are living in like shacks, but it doesn't really matter because most of their lives are spent digitally and immersively. And I actually highly believe that is going to be the case. So I don't believe that I'm sure real estate will be just fine in the near future, but I think there's going to be a very interesting inflection point where digital real estate is actually going to be a huge, huge area that nobody's talking about.
Digital real estate, okay.
Yeah. So let me tell you why. Okay. So recently there is a digital artist. His name is Beeble. He's a very famous digital artist who recently put up his collection of digital art, a big collection of digital art for auction on Christie's. And he sold his collection of digital art for $69 million. Okay?
Is this the NFT or something that I've been hearing about?
So it's really interesting because the guy who bought it, he's an Indian billionaire. It's really interesting and fascinating of his personal story because he actually grew up with very little, but he caught onto the Bitcoin bug very, very early on. So he's now a Bitcoin billionaire. Now, when people are asking him, what is he doing with this digital art? He's saying he's building digital museums to house the digital art. And that's when I realized, oh my God, we really are moving into this area of being digitally immersive. If you look at like I went to the beach in Da Nang, and no matter what time I go, people will be on the beach, but they'll be on the phones. My 60-year-old like mom is on her phone all the time. And so this analog thing of being digital using it on your phone this is going to go away. We're going to be much more immersive. Of course, this is a wild theory. But I do believe that there's going to be a need for a digital world immersion. That's why the Minecrafts of the world, the Roblox of the world,
yes. They're all living in the world of digital. All the gamers are already living that world where they are so immersed and addictive because they rather live in that world than live in reality. Right. And that's why they value, and that's why even gamers and my kids would be like, I want to buy this gun, a virtual gun for like $100. You're like, but it's not a real gun. It's like a virtual, right? But you can see that it's created value within the online space.
That's right.
Wow. You really have opened my eyes up to the world of investment out there. So I guess just to wrap it up, like if people are hearing this, they're like, you know what, it's so complicated, but I do want to take control of my financial life and get coached the right way. Like, how does your program work? And what is it like?
I still am operating on a one-on-one coaching basis while it still lasts. I don't take on more than 6 clients a month. So it's usually broken down into 5 lessons. The first lesson is actually quantifying your financial freedom number. And I created a financial model that anybody can use very easily to understand what that is for them. And it also changes, by the way. Your financial freedom changes as you progress in life. And then from there, we map out like, are you on track or not? If you're not on track, how much more you need to be investing to be on track. Most people are surprised to realize, especially if they start early, that they are on track, but they need to start early. So then that's the first lesson. The second lesson is about how do you create a diversified portfolio, why portfolio diversification is important, and then how do you invest in the US stock market, because I still believe that is going to be one of the strongest markets going forward. And then the third lesson is how do you invest in bonds and real estate? Because again, those are 2 other important asset classes. The fourth lesson is how do you kind of put all this together in all this like kind of theoretical stuff into tangible stuff. And the reason why it's really important for me to make sure that my clients not only learn what they do, but implement what they learn is because I do have an 125% money back guaranteed policy where if they don't know how to actually invest with the theoretical stuff into the day-to-day stuff, then I would not only give you your money back, but I would actually pay you to improve my class.
Love that guarantee. That's confidence right there. Okay, Actually, I thought of another question too. It's like, before talking to you, I would have thought, okay, let's just keep paying down all our investment properties or something, right? What would be your take on do you pay it down or do you keep investing more to create assets, positively geared assets?
So you can think about it as opportunity cost, right? So for instance, the US stock market over its entire lifetime has returned about 10% over its entire lifetime. Okay. While, for instance, the interest that you're paying on your loans is maybe 5%, 4%. So you can think about it like, yes, stock market go up and down much more than the steady like 5%. It's just the weighing of like your risk and reward.
Okay, gotcha. So like if you can pay down your mortgage, but it's just the return on your money is better in certain thing, and you just have to balance that. Yeah, if you're safe, you pay that off, or else you do more. Okay. That's amazing. Okay, I guess before we end, what is the last takeaway you want people to know from watching this about how to take control of their financial situation?
So right now we're at a very interesting inflection point in our lives. There is a huge confluence of technology that is here and it's rapidly accelerating. This is why ARK Investment is a big investment firm that invests like purely in like the super futuristic stuff. Why they've done very well in the last few years is because there is a massive confluence of different things like AI, space, artificial intelligence, robotics, all these things. So, and cryptocurrency. So it is a very important time to like start learning what is going on. You do not want to be on this wrong side of history, because if you are, there is big devastating effects. And the last thing you want to do is be sitting on cash, especially at the rate of which everything is, how much printing of money there is, that there's a rapid deceleration of the value of your money. So learn how to invest, get out of debt if you're in debt, and really just like try to educate yourself as much as possible.
Well, thank you so much, Peter. I learned so much from you, and I'd love to connect after this call as well, because I'll be like, asking you about your service for me, I think. Well, thank you so much for being with me today.
Yeah, for sure. Oh, and by the way, you can reach me at peterduan.com. It's www.peter, duan.com. That's my main website. You can always email me at hello@peterduan.com.
Yes, definitely. We always ask our guests to share with me that, and I'll put it in the description anyway. But thanks for reading all that out. See you again soon.
All right.
Well, thank you so much for watching. And if you like more videos like this, I have more over here for you to watch. And love to hear in the comments below if you have any questions for me as well.